profile traders, and this is the market analysis for October the 20th, and this is Reza speaking. Previously I tweeted that I wanted and I was ready to see a rally that would take us up to 1900 as we approached 1850. And I stated that 1850 was significant level of support, and in order for them to break it, they needed to bring heavy duty artilleries. Well, they did it. They did break 1850. So let's put a line on it so we can see. And then as soon as 1850 did not hold, we got a deluge and a massacre to the downside. Then came this session in the overnight where, as expected, we came down and tested this low of 1812, did not break it, and this built huge confidence that the market in the very short term was gonna hold this low. Retested lows that do hold are very important lows or highs. Then from here on, the up move started, and this up move started as soon as news came out that the economies are slowing down, that everything is slowing down, and that fear that was in the market about QE ending and interest rates going up as early as next year dissipated. So what happened here is that the comfort of the Federal Reserve continuing their money printing policies, which, by the way, let me tell you this if you didn't know, please, for the sake of baby Jesus, Allah, Muhammad, and Musa, which is Moses, do not believe for 1 second that QE is over. QE is not over. QE is over for the eyes of the dumb public, so that the dumb public stop crying around why the Federal Reserve is printing money. QE will be going as usual, but under the table without you and I seeing it. And smart money, insider money know that. That is why on the back of horrible economy and on the back of horrible international situation, on the back of a horrible global slowdown, on the back of a horrible Ebola crisis around the world, on the back of everything else, they just bought this thing like animals straight up to 1900 now. Why? Is that because they're idiots? No, they're not idiots. Because they know that even though that officially this QE business is over by end of October, in reality it is not over. And under the table, the Federal Reserve will continue to inject trillions of dollars into the pocket of the billionaires. So 1900, here we are. Now we are at extreme critical point of inflection. Either we are going to explode, and if we do explode, we are going straight first towards 1917, second straight towards 1930. However, if we fail here, we come down. As soon as we break below 1891, we should start to see an aggressive selling that should take us down towards 1875. Therefore, 1891 is now critical support. Second support below is 1882.75, and after that 1874.5. On the upside, 1917 and then 1925 to 1930. So it's very, very important that the buyers, if they want to remain in control of this market, we need to push into 1900 without any hesitation, or else they're gonna come and knock the teeth out of ES. So it's gonna be an interesting market moving forward because something big is gonna happen here. As for crude, I mean, it's a mess. It's a crazy mess. Up, down, down, up. As I said, and I'm not changing my view about trading crude. You cannot rely much on anything. It's very fast, aggressive ups and downs. Obviously, the fundamentals and the paper have detached themselves from each other. Nobody believes anymore on what this paper for gold or crude represents, and that's what the adjustment that you saw in this market. A lot of people just dumped the paper, because what are you gonna go and hedge yourself with paper against a rising price of crude? Rising how? Every criminal in the Middle East is selling oil under the market. ISIS, the thieves, the generals, the dictators, the mullahs, you name it, they sell it. So nobody knows what's going to happen with crude here. Anybody tells you that he knows what's going to happen in crude, he is the mother of all the liars. All you can do is to aim for short-term directions, get it right, ride it for a reasonable amount, and get the hell out. Otherwise, the counter swings come against you. It wipes you out like if you were a mosquito crashing against a windshield. So from here, what should happen? Well, I can give you two very small parameters. Below 81.6, we should go to 80.75. Above 82.30, we should go towards 82.75. That's as little I can forecast. Past that, only God knows. Gold had a very nice rally. When we were down there, I kept on saying I am extremely bullish, extremely bullish, extremely bullish. This asset is underperforming compared to the rest of the bubblish assets, worthless, useless, overpriced paper, etc. I kept on saying this is an excellent buy down there, especially going towards end of the year holidays. I was right. From 1180 now we are at 1250, and it is still looking very bullish here. Now what we are going to monitor is that if we can clear 1250, there is very much so nothing in front of us straight to 1280. If we spend too much time at 1250 and can break above it, I'm sure there will be some profit taking which should take us down towards 1235. If on the other hand we do not spend much time above 1250, but all of a sudden we come and break today's low, that is also going to be a slight negative, which should take us to 1234.8. To make a long story short, this is an inflection point as well. Either we need to go pierce through 1250, explode to 1280 and then 1300, or else this poor puppy here is gonna get a good beating and they're gonna come and knock it back down. As for euro, it's just coming back a little bit to life, a little bit, nothing at all spectacular. I have zero doubt in my mind that from a daily standpoint of view, the low is absolutely not in. This kind of double candle like that holding a low is garbage. This low should be revisited, or this low will break down. Therefore, as it will approach towards 1.3, if it gets up there, it's going to be a handsome sell against the trend line coming down. From that point on, we should come down, retest the low, and then we're going to reevaluate to see if the low retest will hold or not. But I have zero confidence regarding this very recent low that we did put in place, off of which we are bouncing. What was it? the 1.2611. So be careful here with this phony baloney rally. There is absolutely no rush on the buy side. There is no stiff competition for anybody to grab it and make it roar on the upside. It just looks like a dead cat bounce. Below 1.2791, it should start to get bearish again. And above that, 1.2845 is your resistance number 2, 1.2893 resistance number 3. That's about it. Again, if you like to learn real market profile, real trading, check us out, www.profiletraders.com. And again, this is Reza. Thank you for listening.